From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 24th, 2017. Today we're going to take a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. We're starting here on the daily time frame. Take a look at the blue circles along the yellow shaded area. That's right around 7,800, 7,825 is the yellow zone. The blue circles depict the fact that there have been trading decisions around this yellow shaded area. The first blue circle to the left, we see support around that 7,800, 7,825 level. Then the middle blue circle, support into that same area. And then the far left, we see resistance. So what this is depicting is that this yellow zone has been a historical decision zone where the market has bought and sold, entered and exited over the past several weeks. Now, we go back to the right-hand side and we can see the market is challenging and testing underneath it. So we would know that there would be a potential or likely trading decision zone even today, right around the 7,800 level. Let's zoom it in a little bit more here on the daily time frame. And so now we get to this yellow zone and we can see even over the past 5 days, yesterday included 1, 2, 3, 4, 5 days, we've seen support into that yellow zone. So again, what I'm trying to depict by putting that yellow zone here between 78 and 78.25 is the fact there have been trading decisions made here. We call them typically support and resistance, but it's really what's happening around this level that we really need to understand. And there's trading decisions, there's buying and selling happening. Sellers are exiting, buyers are entering. We call that support. Or buyers are exiting and sellers are entering. We call that resistance. And those are the trading decisions being made by the people controlling the market, whether it's bullish or bearish, blue or red candlesticks, whatever color you decide to put on your chart. That's the trading action that's happening around this level. Likely, you and I, the smaller investors in the market, are not in control of this market, not causing blue or red or bullish or bearish candles. It's the world banks and the larger players in the market that are causing candlestick movement and support and resistance. So if they are doing that, all we can do as smaller investors is recognize these levels and make our trading decisions at a similar place. So if we can see history tells us that 7,800, 7,825 is a decision zone, that becomes the place where we might look to make our trading decision as well. So as it breaks through that yellow zone, it becomes resistance. We know that the potential is that becomes the decision zone where maybe buyers would exit and sellers enter as long as it's underneath it. We've seen it into history, even right here, even over this past 4 days here, we can see resistance underneath that yellow shader. Eventually got back above it, but that's what we're looking for. We're looking for it to break through it, hold it as resistance now for the day. We also see that it's moving through the 100 period simple moving average. Now it did that before over here, so let's not get too excited about it, but it is breaking not only through the 100 period moving average, but that 7,800, 7,825 level. So as long as it's underneath it today, we expect it to stay underneath it and not get back above it. So if we're looking for that, we would look to short or sell under the yellow zone, targeting back down to the next support, which happens to be the green zone. Not too hard to see that right here, 77.45.25. We target down to the green zone, and our risk is that it breaks above the yellow zone and goes back up again. So our stop losses would be above the yellow zone. So how do we make that stop loss? Our risk smaller. We allow the market to drift back or rally back to 7,800. So if I'm looking to go short towards the green zone because the market's going down, it's under the yellow zone, it's under the 100 period moving average, I would actually like to do that as close as possible to the yellow shaded area, giving us the lowest amount of risk. Our stop loss becomes smaller, the highest potential reward, the target becomes farther, and we look to go short as close as possible to that yellow zone. Let's take it down to the 4-hour time frame. So here it is. We can see the market pushing underneath that yellow zone. Look at this. We can see the market just in congestion, hesitation around here. So let's look back at history for a moment. We can see a very similar scenario back here where the blue circle is. It sat down in congestion in the yellow zone, decision zone by the way, and eventually right here where this little black circle is, you see the market actually break out What it didn't do before, it challenged, it tested, it false breakout, but what it didn't do before is a candle body that opened underneath the yellow zone, the black circle, little red candle. So that's what we're looking for. To confirm or give us increased confidence that it's a real breakout, we need that candle to close underneath. Once it does, we have the opportunity for increased confidence that it's going to stay under the yellow zone, continue back down to the green zone. Now it hasn't closed yet, the current candle, little tiny candle. So that's what I'm waiting for, waiting for that candle to close, and then maybe a little bit of a rally back to 78 to give us a lower risk, higher reward, and then the short down to 77.45 for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.